Oil extends profits as hazard urge for food improves. U.S. inventories fall. Singapore oil won greater than $1 a barrel on Thursday, extending gains from the previous session, buoyed by means of improved danger urge for food among investors even as decreased crude inventories and a rebound in gasoline demand in the United States supported costs. Brent crude futures for September rose $1.20, or 1.1%, to $107.82 a barrel by using 0158 GMT, after gaining $2.22 on Wednesday. U.S. West Texas Intermediate crude, WTI, was at $98.70 a barrel, up $1.44, or 1.5%, after growing $2.28 in the previous consultation. Risk sentiment has recovered from recession fears because of the continuing U.S. profits optimism and a much less aggressive Fed's rhetoric on charge hikes, which supported a rally inside the crude market, CMC Markets analyst Tina Teng said, including that a weakened U.S. dollar has additionally lifted commodities prices. The U.S. Federal Reserve raised its benchmark overnight hobby fee by using 0.75 percentage point, in keeping with expectancies, to cool inflation, at the same time as the greenback fell on hopes for a slower trekking route. A weaker dollar makes oil, priced in bucks, inexpensive for consumers in other nations to buy. On substances, U.S. crude oil stockpiles fell with the aid of 4.5 million barrels final week, against expectations of a 1 million barrel drop, at the same time as U.S. gas demand rebounded through 8.5% week on week, according to statistics from the Energy Information Administration. EIA-S, the U.S. consolidated its role as the arena's biggest petroleum exporter, Citi analysts stated in Observe, as the blended gross exports of crude oil and delicate merchandise at a record 10.9 million barrels in step with day. U.S. crude exports reached a file 4.6 million barrels of oil per day, Citi said. Exports are rising as WTI traded at a steep bargain to Brent, making purchases of U.S. crude grades greater appealing to foreign shoppers. Prices also determined assist because the Group of 7 richest economies' goal to have a price-capping mechanism on Russian oil exports in vicinity by using December 5, a senior G7 official mentioned on Wednesday. U.S. crude oil manufacturing increase can also be restrained by the supply of fracking system and crews, as well as capital constraints, executives stated this week. In the interim, Russia has cut fuel delivery through Nord Stream 1, its predominant gas link to Europe, to simply 20% of capacity. That could lead to switching to crude from gas and prop up expenditures for oil inside the short time period, analysts mentioned.